Jefferson, is your portfolio red as mine?
Yes. I'm pretty sure everyone's portfolio is very red. My crypto portfolio is down massive. It's red as well. Yeah.
Oh, shit.
I don't even want to open it. Yeah. It's
not buying the dip.
yeah, buy and forget. Yeah. That's the new acronym.
Yeah,
Oh my god.
Yeah.
Hey, I DCA all the way. I DCA all the way until I got nothing to DCA anymore.
You're right there. Payday coming.
Basically coming. But I think you'll be scared as well, right? Because like everything is so red, you'll be like, oh, is it a good time to buy in or what's not? Yeah.
Next time, payday again.
Next month, wait for payday again and go again.
My salary is my DCA, then I DCA out.
Oh my god.
Yeah.
But Jeff, tell us a bit more. What's happening here?
Yeah, so as everyone knows, it's been redness everywhere from the equity to crypto. There's also rumors that the Federal Reserve has been a lot more aggressive in terms of their quantitative tightening policies as well, and may even hike interest rate 4 times in 2022. And that was circulated last night. That potentially would have become.
But question here, Jeff. Yeah. With regards to that, I thought when they stated this in December or something like this, they already stated they were going to raise it 4 times in 2022. So how did last night's thing differ?
Right. I think it wasn't 4 times. I might be wrong, but it was 3. Yeah. So
got it.
So we've
0.25% just kills the market. It's ridiculous.
Yeah. It basically sparked a sell-off overnight. We sent the benchmark 10-year treasury briefly above 1.8%, and nobody likes that. It essentially signaled to the market that, hey, inflation is a big thing that the Fed is looking at right now, and why is there a need for the Federal Reserve to go out on the news and circulate that we are going to do it 4 times in 2022. Definitely not the best kind of thing. Especially in the crypto space. Yep. You see a shift away from excess liquidity and accommodative monetary conditions having to become a structural headwind that we have highlighted in the past couple of shows as well. And now it appears to be coming to a head. Yeah. And that's going to be a thing that's going to happen. Yeah.
Yeah, actually, I have a question, right? I mean, we think about 3-4 episodes that was like a month ago, you were talking about, it's 3 rates, it's a big thing. It's 3 rate hikes, it's a big thing. Now it's 4. I mean, is there some sort of speed of change? Like within a month, they are proven wrong and they need to change it again, right? Because that's a bit scary. I mean, you think about it, right? To me, it's like, they are planning for the next 2-3 years. They know roughly what they want to do. And I mean, if you change your plans every month, that's not a good look on you, I would say. So I was thinking, is this something that could possibly be also scaring the market slightly? Like, the Fed doesn't really know what they're doing. They don't really have control. We need to kind of be a bit more careful.
Yeah, I think one of the things is that because this came on the back of when the Fed released their transcript from the December meeting, right? So it became clearer as to what Powell was actually saying. And if you look at, say, the implied volatility in the market itself, just in the equity space, you see that there's a disparity between the low rates and high implied vol as well. So given the fact that inflation has been robust in a couple of months, I think that the Fed has been more concerned to reach that, rates should fundamentally be a lot higher as well. And they essentially took the opportunity to just go out there and be on the hawkish endeavor, right? I mean, this is probably one of the best times for them since they just released the transcript. Yeah. I don't think that they are getting anything wrong here. They probably weren't too sure whether it's 3 or 4. Honestly, it doesn't make much of a difference, but it's just noise from the markets, right? When traders start hearing, yeah, exactly, yeah. So when the traders start hearing 4 4 rate hikes instead of 3, it sort of like signal that, hey, there's going to be higher use, but we all anticipated that in that sense. So
yes,
in fact, I know that traders, investors have already positioned themselves, that like the real money managers have already positioned themselves for higher rates. So that's not too much of a concern, to be honest. Yeah.
Cool.
Got it. And just to clarify here, right? The 3 to 4 obviously is a bit, for me, a little uncertain, right? Like the Fed maybe got some data in December and were like, you know what, we need to do it over 4. Or could it be that they're looking to still increase the rates, but instead of doing it with a higher slope, they do it over a lower slope with 4 rate hikes instead of 3, right? So effectively the rates are going to maybe go up the same, but just on a gradual state in 2022.
Right.
Like that could also be an opportunity, right?
Right. So I guess you're trying to say that whether the incremental amount by the end of 2023 will be the same if it's 3 hikes or 4 hikes, right?
Yes.
That's what you're suggesting. But
Yes.
the thing about the central bank or most central banks is that they always have a fixed incremental increase whenever they do a rate hike itself. So like usually in a form of 25 basis point for the Federal Reserve. So it's just more of like what Anthony is saying, right? You get that 25 basis point extra in the year itself, and what does that mean? Yeah. But I think it's more so where the participants of the market basically judge that the appropriate timing of the balance sheet runoff in the US will be closer to that of the policy rate liftoff than the committee's previous experience. So they didn't. I think in the past couple of years there wasn't a clear year where they actually sort of say we are going to do every quarter we are going to do a hike. In addition to this whole balance sheet runoff that's going to happen in the next couple of months. So the Fed is essentially trying to play the game to see how fast inflation will then moderate, right? If it's slower than expected, then the policy is really not in the right place, and definitely will have to be definitely be moving quicker and more aggressively than the market's priced in that sense. Yeah.
Okay, wait, sorry, 2 questions. One, just now when you're talking about balance sheet runoff, that's the tightening part of reducing the size of the balance sheet and all of that, right? Which we talked about previously, and that's the precursor to the interest rate hike.
Yep, that's right.
Mm-hmm.
Okay, good. Then okay, we are done. I think I'm done with the boring econs part. Right? I don't want to go back to Macro 101. Crypto.
Hey,
right?
It's interesting. Come on. Hey.
It's actually interesting. It doesn't help my portfolio. So they're my crypto.
Yeah. Okay. I was going to crypto anyway. Yeah. So on the front of crypto, right? Definitely. If you look at Bitcoin, I think there's some form of like buy opportunity right there. But of course, this is not financial advice. If you look at the charts itself, you can see a double bottom from September 2020 lows after having to retrace in Q4 moves up. So right now, if you look at it historically, a good buying opportunity for Bitcoin is that if it's trading below 2 days 200 EMA, it's actually a good indicator to say that it's a buy signal. And I do think that potentially there's opportunity right there. So do your own financial research.
Okay,
as well.
wait. So what's EMA?
Right. So EMA itself is basically a form of moving average that you look at. So in this case, it's exponential moving average. Yeah.
Got it.
Essentially, you log into an exchange. You draw the squiggly line. You see action there. You buy and ready.
You're right. Yeah.
But this is not very good since I DCA everything already, right? I got no more money. Gotta wait for payday.
I mean, if you DCA, then it's more of a perspective that you're taking, right? Like if people are actually looking into having to just long Bitcoin, you are more of a trader than an investor in that sense. But it's always good to look out for opportunities in the markets. And in this case, because you with that said, like Bitcoin being a buy opportunity, from my perspective, in that sense, it can also be indicative for you to, park more money in there and just ride out the dip, right? Yeah. So that's one of the ways to see it as well.
Got it.
Yeah.
Yeah. Yeah, I think it's all a type of market timing, right? I mean, we also talk about, if the market's going down, maybe you DCA a bit more, that sort of thing. It's all a function of the same thing, just different, I guess,
exactly.
magnitudes, right? Yeah. So,
yeah.
Interesting. I mean, to me, it's always at least you haven't mentioned like Fibonacci or Elliott wave. I go, oh. But yes, good to know.
Yeah.
Okay.
Cool.
One more about crypto. What about alt L1s? Since I have a lot of those.
I think that for the L1 space itself, I honestly haven't been looking quite a bit at it because I've been I actually been looking at quite a bit of Web3 tokens related matters like GameFi and what's not, right? For L1s, I think that it is going to follow a narrative to which if Bitcoin is going up, then your L1s will definitely recover from there. But like I said, there's still many cyclical negatives for crypto, mostly because of the Fed and the halving cycle both being bearish, right? So crypto is basically on the hype cycle, which is way off the highs right now, and it's just gonna be a thing where it's just market reflects in that sense, if you want to think about it. That's my take for L1.
Got it.
But I think interestingly, Web3 is something that will be is super awesome, definitely. But with a lot of regulations coming to kick in, and I think people don't like, or rather governments don't like what they can't control, right? So if you look at it, where the American crypto regulations are actually looking into trying to regulate the crypto space and Web3 as well, trying to understand a little bit more. That's sort of a signal to me that, hey, Web3 is going to take off at some point. But for now, projects like Sandbox are overhyped in that sense. And maybe it takes a bit of time for the regulators to essentially,
go in.
Say, hey, if you can't beat them, then we got to join them in that sense. Yeah. So that's my current take.
When they join them, it might not be Sandbox anymore, right?
Exactly.
So
Yeah.
That's always that risk. But we should talk more about GameFi maybe next week.
Yeah, sure. Yeah.
Something I looked at, I'm like, this is rubbish, this is bullshit. I don't like this, and then I just closed.
Yeah.
I'm looking to learn, right?
Different perspective.
Absolutely. And, I think it's a quick takeaway then, right? Everything's red right now. Anthony, what do you think, our listeners can do? We mentioned a little bit here, the opportunities and so on, but maybe we could hear your take.
Yeah. I mean, not financial advice, again, obviously. You should always take everything I say with like a huge spoonful of salt. But I think really what I'll do is I'll just DCA, and I think we don't know when sentiment will shift, right? In 2 or 3 months, with the Fed going, actually, you know what, economic growth isn't as good as we thought it was. I would rather prioritize that over controlling inflation, and they just stop rate hikes, right? And that's it. The next day the market goes up, you are late to the game. So be exposed, right? Have some exposure, keep buying in. Maybe don't buy so much if you are scared. Buy something safer, financials, REITs, again, if you are worried. But I think fundamentally, I would say always have exposure, right? Don't be 100% cash, because you might not be able to catch it. And at least for me, I don't look at the markets every day or every hour, so I definitely almost won't catch it. So yeah, it's just a matter of waiting and waiting for the recovery to come.
Yeah, for sure.
Thanks, man.
Yeah.
And Jeff, go for it. What's your take?
I think for myself, I believe that like what Anthony was saying, right? It's always good to start building your war chest as well. If you are, I take a different view with regards to cash in such situation as well, because I think that while you can't time the market, but there's always indicators for you to look at, or rather you can start building your thesis right now. Just have a watch list, look at the different equities and see what you like and what you don't like, right? And if some of these equities are in your portfolio that you don't like at all, then maybe, it's time to cut them loose once the market start recovering a little. That's one of the things to think about. And building a war chest basically means that you have some spare cash on hand, right? Like what Rakesh has been doing, put in DCA and everything, and you want to have some cash at the same time.
You should put your war chest in Anchor and earn 19.5%, right? Come on.
19.
Yeah, you've been talking about crypto
right?
for like the last 3 weeks, and nothing has been done.
Yes. No. And I think like the best thing that we can do here is, I think, just be safe on your bets, right? That's the way. I think that's one of the things that I would say to our listeners and myself. I focus a lot, like I said, on the fundamentals. So if I'm happy with the stock, I go into it in the first place, even during this massive boom that we've had over in 2021 and in 2020. And I'm confident, right, that this company will bounce back. It may take 6 months, it may take a year, and yes, you can say your money's locked in order to keep that, sort of trying to make that money that you did make and now completely wiped out. But it will come back based on the fundamentals, and that's really what I believe. Of course, right, I'm still like everybody else. Every other, retail investor out there, scared to even open the app to look at how much I'm losing right now.
I keep opening my bank app to just check how much money I have left to put in. I think I've been playing with DeFi, right? So it's a bit odd. It's difficult to keep track. But right. That's a story for another day. Yeah, but right, that's pretty good.
So I think with that, that's probably the best advice that I'd give. And I think, take the opportunities, as Jefferson mentioned and Anthony mentioned, DCA, right? I've been taking Anthony's advice and he's saying until I don't have any more. But keep it going, guys. Keep strong. I know, right, if you've done your research, and we always beg you to do your research and not just listen to us, go for it. I'm sure you've made the right bets. Just wait for it and it will come back up, right? History has shown that.